Dan Nadler is here, the CEO of Kensho. You have figured out a way to sort of democratize stock picking. You figured out a way to use big data analytics faster and cheaper to look at the stock market. How are you going to help CNBC? What are you bringing here to help us understand the stock market?
Sure. So what Kensho does is it builds computer systems that allow people to make better, smarter, faster, more informed decisions with statistics. So it's actually rather similar to sabermetrics, what sabermetrics, more commonly known as Moneyball, did for sports, to quantify, to measure, to understand the impact of every catch, run, throw, pitch in a game. Now in financial markets, it's a little bit more complicated, there are more variables, but if you put sufficiently powerful computer systems behind it, you get some very predictive analytics.
Now why is this possible now for the stock market? We've been watching NFL games for years. They use big data analytics. It's full of information in a typical NFL game. Why has Wall Street been a little slow in embracing big data analytics? Some hedge funds, but not Main Street.
Yeah, so I'd say there are two factors. Well, for one, as many variables as there are in the NFL, there are more in financial markets. I would say second, our major arbitrage is we realized that leading consumer internet companies like Google, Facebook, Apple, had leapt a generation ahead in terms of the complexity of the computational problems they're dealing with. We were able to leverage people from those companies. We have the most brilliant engineers in the world up in Cambridge, Massachusetts, who come from companies like that, and we were able to direct them toward this problem space in a way that has never been done before for financial technology.
You crunch all this data, you come up with all these relationships. It's an amazing system. I've been playing it for 2 weeks, playing with it. Why did you just start a hedge fund? Why did you do what everybody else does, start a hedge fund and make $1 billion? Why are you're not a trader, you're a company that's licensing your technology. We're partnering with you. Why didn't you just start a hedge fund?
So I think 10 years ago, that would have been the optimal strategy, and there's some notable examples of people who did that. Kensho is making the bet that the cost of computing per constant dollar has so exponentially deflated that this technology is going to become ubiquitous, and we're going to be the company that takes that global.
I have only spent a few weeks with Kensho. What's amazing to me is how counterintuitive some of the conclusions are. For example, normally October's a down month, but your data indicates since 1982, the markets have been up 100% of the time in the 30 trading days leading up to elections, in a midterm election. Everyone was panicked in October, said sell, 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 and yet it turned out to be correct. October was an up month. So it's counterintuitive.
You know, that's an example of how stats allow you to take a step back from the emotion, to take a step back from the noise, and to really put things into a historical context, and to focus on the big macro picture. So in the middle of October, when the market was swooning, you know, we had this information, we had these stats, and we said, look, you know, every single month in the run-up to the election before, this is always traded positive, and so it did.
You know, for a lot of big hedge funds, quant hedge funds, this is sort of the secret sauce that they used, looking for these hidden relationships, and they trade on this. Are you going to be removing a lot of alpha from the market? If you truly do what you want to do, which is democratize this information, what does this mean for all these big hedge funds who use this information?
Sure, well, technology actually never ends up removing alpha from the market. You know, when you guys first put out the stock ticker in the 1990s, everybody said, you know, the CNBC stock ticker, all these hedge funds are trading off of more privileged access to higher speed information that's going to take away their alpha. Of course it didn't. It just raised the baseline. It raised the common denominator. When the baseline goes up, everybody has to do a better job, but these tools are only as smart as the people using them.
Now we want to know, let everybody know, NBC Universal is making an investment in Kensho on behalf of CNBC. I know people are going to be writing in saying, well, it's nice CNBC will be making comments on the markets using Kensho, but what about me? Can an average investor get access to Kensho? What's going to happen down the road? Where do you see this partnership perhaps evolving towards? Give us some ideas.
So I think the trajectory of all technology is towards increased ubiquity and accessibility, and I think investors at home can expect to see that this will be no different for this type of technology.
David, I know you're listening pretty carefully. What do you think the hedge funds that you talk to will be thinking about this kind of technology and where it might be going, and just making it more available to the masses?
You know, what I wonder, I guess, is if you commoditize it, what's its value? I'm curious about your business model, sir, in terms of why you chose to go this route, broad, as opposed to very narrow, charging an extraordinarily high price, perhaps, for data that will be very valuable, instead going ubiquitous. Isn't it going to all get commoditized?
Yeah, well, first of all, you can build a very valuable company off of commoditizing previously privileged data. Mike Bloomberg, our former mayor in New York, quite nicely proved that. So I think the trajectory of all technologies is toward increasing ubiquity. I think no company can try to prevent that, but I think you can build a very valuable business off of being the company that takes that technology global.